How's it going, everybody? It is Dennis, and we're back with another video, and it's in presentation style. We're doing a presentation. As you can see, I could walk around, we could look at the screen, we could look at the background, and today we're talking about Roundhill ETFs and why they're better than YieldMax, why they're better than Defiance. And I know a lot of people love YieldMax, a lot of people love Defiance, and they just can't get over it. They just love it so much, they want to continue investing. But you know what? I just have to say it. Roundhill is better. Roundhill is better for dividends. Roundhill is better for keeping your value. Roundhill in general is better, is safer, in my own opinion. Of course, this is all my own financial opinion. This is not financial advice, so take this with a grain of salt. So, to begin, as always, love being transparent as possible. I myself hold funds in QDTE, which is a Roundhill weekly paying dividend ETF, which is what I'll be going over. We're talking about the weekly paying dividend ETFs because they have a special trading ability, which the YieldMax ETFs do not have just yet, or maybe they'll have in the future. So the shares we hold is roughly 101 shares and a little bit on the side. We are currently down negative 4.84%. or negative $222. So we are down at the moment, but that is because the QQQs fell, which is what the QDTE trades on, the NASDAQ. So that fell, and so did our portfolio, but we continued to average in, average down, and continue to grow. As always, being transparent as possible, I own myself QDTE. Now, QDTE. What is QDTE? Well, of course, like I mentioned before, it trades on the NASDAQ 100, and it trades covered call strategies similar to YieldMax or YieldMax and similar to Defiance. What makes it different? What makes it better? We're going to get to in a second, but the yield as of right now is 67.40% annually when it comes to the dividends. We also have XDTE, which trades on the S&P 500. This yield is a little bit lower. It's at 34.88%, but it does keep its value a little bit more steady than QDTE, has less volatility, and therefore has less dividend payout percentage. We can see over here the dividend payout right there. We could go ahead and go on this side. That's the dividend payout. You could zoom in onto that, and we're going to go over why these funds are so good. But before we do that, we're going to go over the weekly dividends that they pay. They pay weekly dividends, and they are so very good, especially with QDTE. It has been impressing everybody for the past 3 weeks, delivering a 56-cent dividend per share, a 51-cent dividend per share right here, and a 47-cent dividend per share. XDTE has also performed quite well. If we go over to this side, they have paid a 38-cent per share, 41-cent per share, and 35-cent per share in the past 3 weeks, performing quite well. And the way they do this is that they sell daily, the way they sell this is they do covered calls. We're going to get to the daily part in a second. They sell covered calls, and of course, they don't hold overnight. Well, how do they not hold overnight? Well, they trade daily daily options. They do 0 DTE options, which are allowed on the QQQs or the NASDAQ and the S&P 500. They use 0 DTE options, and they sell covered calls on their synthetic position that they purchase, similarly once again to YieldMax and Defiance. But instead of doing weekly options, they do daily option trades, and that's what makes them so great. This is what makes XDTE and QDTE better performers in every aspect than all YieldMax ETFs and all Defiance ETFs. Don't even get me started on Defiance. Never going to talk about that. Just not my cup of tea. But for S&P, or when it comes to YieldMax compared to Roundhill, Roundhill just gets it completely. Like they're just so much better in so many aspects, and we're gonna get into why. But in general, it's because they trade 0 DTE, and because they trade 0 DTE, they beat YieldMax and Defiance, who trade weekly. And because of those weekly trades, they're just not able to perform as well as QDTE or XDTE. So when we look at QDTE, even before we get to the technicals of why it's so good, we can see that on the basic chart, when we look at year to date, QDTE has not performed so well. QDTE is roughly down negative 6.87%, while QQQ or NASDAQ 100 is down 16.9%, up 16.9%. Of course, QQQ has more time on the year to date because QDTE did come out in March, so it has a little 3 months lacking on the year to date chart. Even then, if you actually look at QDTE compared to QQQ, when you add the dividends in, so drip reinvested, so you're reinvesting your dividends, and those dividends are on a weekly basis, so you have weekly compounding, you now have a return, let's go on this side, of 8.44% from QQQ. So if you invested into QQQ when QDTE was launched, which was in March, you would have 8.44% growth. And if you invested instead into QDTE, you would have 7.08% growth. 7.08% growth with dividends reinvested on a fund that just started and pays weekly. And that is only getting started. It tracks QQQ so well, it is insane. And we're going to compare it to a comparative YieldMax fund, which is nowhere close to how well QDTE does and XDTE. But since I personally own QDTE, we're going to be going over QDTE majority of this video. So it performs similar to QQQ with dividends reinvested. Of course, when you pay out dividends, you lose value, right? You have to pay the dividends out from the share value. We know this from YieldMax. We know this from Defiance. So even with the payout going out, we're still at roughly 1% lower than what the QQQ is. So you're adding shares. You're therefore adding value when it goes up and it grows, and you're either averaging down or even if you're averaging up, you're still beating or going to beat the QQQs in the long term, because those shares will add up, those dividends will grow, and I believe that sooner or later we will outpace QQQ, and I think we will get to that point where QDTE beats QQQ just from holding your shares, from reinvesting. You will beat QQQ with QDTE. And of course, the way they do it is their daily contracts. Looking at Robinhood, which is the thing I use. I use Robinhood as a trading platform. We can see that you could do daily trades on the QQQ. You could do this. I could do this. I do this. Not yet personally. I want to get into it with 0DTE trades, but you can do daily trades with QQQ, S&P, and what else is it? It's the why am I forgetting? There's another one. Forgot the name of it. It's TNA trades on it. Why am I forgetting? Doesn't matter. Most of these you could do daily trades like the S&P and the QQQ, and that is what they're doing. They have XDTE and they have QDTE trading on QQQ and trading on S&P 500. Now, when we look at the comparison on a 5-day chart, on a weekly chart, this is why they're so good, why QDTE is such a good performer, because if we look at the 5-day chart, look at this, 6.17% return on a 5-day chart. And if we look at QQQ, what is it? It's 6.17%. Both of them are 6.17%. Do you understand that QDTE was able to capture the full growth of QQQ while also delivering a dividend? That is absolutely insane. That is absolutely insane. If we look at something similar, if we look at YieldMax funds, and we look at AMZ compared to Amazon, its underlying, we could look at AMZ is 3.64% on the 5-day chart, and Amazon is 6.72% on a 5-day chart. They were able to capture half of the growth of Amazon, the underlying, with AMZ. Why is that? Well, because they trade weekly. When you trade weekly, you can't change your weekly strategy that much. Of course, it's weekly. You can only change it every other week or every week. You can only change what your option is, right? You have to either switch it to next week, and if it doesn't work, then you have to switch it to the next week. And it's a weekly. You're limited to the weekly chart or to the weekly trades. When you look at something like QDTE, you're doing daily trades. You're able to adjust on a daily time frame. You have more time to adjust to the growth, to the decline, whatever it is. You can adjust on a daily basis and win those trades from the synthetic that you own. That is why QDTE is so much better. That is why XDTE is so much better for not only dividends and what's it called, and compounding, because it's weekly, but also for keeping the value of your shares. You bought at $40 per share, you will be at $40 per share most of the time, or even more, because as we can see, it grows with QQQ pretty well. Of course, there's going to be moments that when there's a dip in QQQ, it is harder for QDTE to recover because, of course, you're limited to the cap. You're capped up on the top side by the covered call you have on the top side. But it is way better due to the daily changes you can make compared to YieldMax or Defiance. YieldMax has to wait until the week is done to switch it over to next week to where they could have any gains that they're waiting for. Or they could do an early swap to next week, and hopefully their thought process or whatever trade they took works out and they're able to gain all those gains on the upside. But most of the time they're capped, and until the week is over, they will be capped until they do the next trade to the next week. With QDTE, I know I'm being repetitive, but it's daily changes, daily movements you could do with your options, and daily gains you can have based on how the market is reacting. The market is down, you do a lower option call, make more premium. The market goes down, but you made that more premium to make up for the market going down. Now the market is going up, you do that daily trade to go higher. You made less premium, but you have all the gains on the upside. That is the beauty of the daily trades with QDTE and XDTE. Additionally, with the weekly compounding effects. And thirdly, you have the value hold of your shares. This is the beauty of these funds, and not to mention the disappointing view when you look at AMZ's website or YieldMax ETFs website and you see the 29.71% compared to XDTE, which is at 34.88%, and QDTE at 67.4% annual return. Of course, before we make too much fun of AMZ and YieldMax ETFs, it has to be noted that these distribution rates are volatile. It depends on how much has been paid out recently, and of course they move around up and down. AMZ has received a low dividend payment for the month of August, and therefore its distribution rate has fallen. And of course, a comparative to QDTE and XDTE, who've had high dividend payments, of course the distribution rates would be higher. But just looking at this is hilarious. You have AMZ, who has weekly trades, loses value because they're not able to capture the value on the upside, but still loses all of the downside. Of course, it's a little bit slower because you have the premium being kind of like a hedge on the top side, but you lose the same as when Amazon falls, and then you gain less on the upside because you have weekly trades. And of course, QDTE also is capped. We've mentioned this before. XDTE and QDTE could be capped if the market rallies very fast, but QDTE and XDTE have daily trades that they could adjust and therefore have the gains of the next day or the next day or the next day on the 5-day trading period. They are absolutely crushing it, and that's why their dividends are going ham, because they're just performing so well. The market was crashing, they kept going, they kept lowering and lowering and lowering on a daily basis, getting that premium while the market was going down, and that's why they were able to deliver so well. And now when the market is going up, they're raising it every day and getting all those market gains on the way up. And that's why that 5-day looks so beautiful as it does, with a 6.17% gain on the 5-day and the 16.17% gain on the QQQs on the 5-day. Yes. Yes, yes, yes. That is why I continue to buy QDTE. That is why I continue to reinvest the dividends of QDTE back into QDTE. And that is why I look at this screen of the gains of QQQ and QDTE on the day of inception, of that 1% difference with dividends reinvested. And then you look at this chart right here with the dividends they've earned. It's just beautiful to see. It's beautiful to see. And I don't understand why people are not investing into Roundhill more. It's a weekly paying dividend ETF. Therefore, you have weekly compounding, right? So if I'm getting $50 every week and I take that $50 and buy another share every week, I now have an additional 4 shares I didn't have by the end of the month. Compared to, let's say, YieldMax ETF, where you get a monthly payment and you have to reinvest every month. And also, you might not be timing the market at the best times, because a month, you do weekly dollar cost averaging with the dividends they give you, compared to a month, monthly dollar cost averaging, you're missing out on those weekly opportunities that might be available. So you had the advantages of the weekly payments, the advantages of weekly reinvestments. I do not see why you would invest so much more into YieldMax, and I understand that they've been around for longer, and I understand that some of them pay higher distributions and have continued to pay higher distributions and continue to have gains in their value of shares, but that is not going to last for long. Most of it is, of course, they have technical analysis. I'm not going to say all their gains are luck, but most of it is luck. You can't really do much about it. You don't know if Nvidia is going to go up or down, if Coinbase is going to go up or down, where Bitcoin's going to go, what Bitcoin's going to do, what Nvidia is going to do. You just don't know. You're going with the 5% rule that they usually go with. They try and get the most premium they can, and they try to keep the value as much as they can. But in total, they just want to get income. And that's what they're known for. Listen, I can't do anything about it. They're known for YieldMax. They're called YieldMax ETFs. They want to give you the highest yield they can, and they don't care about value. But if you're a person who cares about value, and you're a current person who cares about decent dividends, QDTE and XDTE are the way. If you're a true dividend investor, and you care about compounding, you care about holding your value, and you care about having a decent dividend, even if it's 30%, 20%, I don't care. 20, 30% with keeping my value is fine with me, especially on a weekly compounding basis. I know even with 20, 30%, it might not be impressive in the short term, but in the long term, it will outpace YieldMax, especially with their underlyings, the risky underlyings, which a lot of people are invested into. If you're invested into Amazon and Google or GUI and ANZ and Apple and all these funds or MSFO, of course, they're not going to be going anywhere. They're mostly going up, right? That's just how it is. But if you're investing into NVIDIA, Coney, Misty, I'm not so sure about that. Sure, the yields could be great and they could pay off your initial investment in a quick pace. But as we've noticed recently, it's slowing down and the value of your shares is falling. And since you were reinvesting on the top side, if you are now averaging up. And because you're averaging up, when it goes down, you will go down harder. So personally, I will continue to buy Roundhill ETFs. I will continue to reinvest into Roundhill ETFs. I'll continue to use the weeklies to then buy other ETFs as well once I reach that 10% portfolio value. And I'll continue to use my option income to buy more QDTE and more XDTE, which I want to get into as well, and just continue to buy into that because weekly playing dividend with weekly compounding, once again, value being kept on my shares and good returns is all I need. I don't need crazy 120% returns like NVIDIA, Coney, or Misty. I'm okay with my 20 and 30%. Or right now, as we can see, if we go back, the 67% or the 34% that we have, I'm okay with that. I'm okay with the variations of dividends. I don't need a consistent dividend as long as I'm getting it, because right now I'm not living off of it and I don't need that income. I like my value, I like my growth, and I like getting my dividends on a weekly basis because I can do whatever I want with them. Say one day or 1 week I want to use it on an option strategy, I could do it. I don't have to wait until next month for the end of the month. I could do it whenever I want on a weekly basis. And that's why I love QDTE and XDTE. Of course, I'm not invested in XDTE. Maybe I will be soon. But because I'm investing in QDTE, as I've shown you, I'm enjoying it. I'm loving the dividends. And I think a lot of people should give it a try. Of course, not financial advice. But these funds are performing well. And their history or short history so far has proven that they're doing very, very well. So that is it for me. I know I'm a little out of breath. I've been going ham at this, and I think a lot of people should take a look at these funds and see what they could do for them. Of course, it depends on your strategy and what you want from your dividend income strategy or your dividend income portfolio. Once again, this is just a way of you guys to gain some knowledge into any choices that you might make in your own portfolio. So that has been me. My name is Dennis. Thank you so much for watching. And as always, subscribe, like. You know, I gotta keep it up with everybody else in this community, yelling that at the screen or yelling it into a comment section, because apparently that does something. That's you, YieldMax ETF. I hear you. I hear you. But thank you so much anyways for watching, and I'll see you guys in the next video next week. Peace.